And for more on all this, Gary Hager joins the conversation now from Integrated Wealth Management, and Ron Davari from NewOak Capital is still here as well. Let you weigh in, Gary, since you haven't had the opportunity yet. And you know all this stuff about whether what happened in terms, there was a glitch, obviously, of some sort between 2:30 and 3 o'clock yesterday. That aside, what's the bigger picture, or is there one? This morning, we started to get into a discussion about days of reckoning and all this type of stuff with governments having spent more than they could afford to. What did you take away from yesterday after it was over?
Somebody on Wall Street or some group, I think, precipitated this mess. I think that this was calculated. I think there's no B versus M. That's somebody, I don't know who floated that idea, because I work with a lot of hedge funds, and they have internal systems that automatically prevent unusual trades from occurring.
Right.
So
A mistake
instance,
like that.
If our routine trade is 15 million shares or 10 million shares or whatever the number might be, and all of a sudden
how did this happen?
a billion shares, I think there's a couple of potential things. I think it's cybercrime. It's very interesting that this occurred after 2:30 when all the safeguards and the circuit breakers were off. I also find it very interesting that it occurred over a very short window of time. I find the anomalies of stocks going down to zero to be very suspect. So I think it's very possible that somebody inserted a virus and
Do you think that's possible, Ron?
It's very possible. But again, I think it points out that the buyers weren't there to lift it all up in a very quick way. People were thinking maybe perhaps there is a real crisis here. Yeah. There is a market confidence issue.
But it doesn't account for stock prices going to zero on 5 or 6 million.
No, I agree. No, that's quite
understandable.
understandable.
So when you couple that with the events that occurred, the speed at which it occurred. Now, admittedly, you're in a theater and you yell fire when there's no fire. Everybody's storming for the exits. And the hedge funds and the mutual funds all have their set program algorithms that say at 3% decline, 4% decline, 5% decline, this is what we do. But somebody, in essence, had to push the boulder over the cliff. I can't say who. It could be internal to Wall Street. It could be external. Somebody floated the idea of cyber terrorism, that this is another way to come into the market and really rattle the American economy.
Sure, but right now we don't. I mean, and to your point, it's fine to bring up these different theories as we try to figure out what happened yesterday.
I really feel that this is traceable.
Okay, well, that's one thing. But today, this morning at 5:41 Eastern Time, we don't have those facts yet. So based on that, the fact is we still have to go back to the same market today that still has those same vulnerabilities, if they indeed are vulnerabilities that could happen, whether it's cybercrime, cyber terrorism, a glitch, a mistyped number. Either way, we're facing the same market this morning. So what do you do today?
I'm buying. I'm buying. The economy is still on
everything?
the mend.
Are you buying everything?
Just about. I mean, you could take a look. I mean, I would first start, as I have recommended for some time, the strong dividend payers. If I had the opportunity in the seconds that were available in front of the screen to be buying Procter & Gamble on the way of that, I would have been buying with every dollar that I had. So today, I think unemployment report is going to be a key tipping point today. If unemployment comes in benign, I say we're up 200 in the Dow today. If unemployment comes in strong, we're going to make it all back. And we're going to start moving in the opposite direction, especially if we get a decent, somebody comes up and makes a statement, a Warren Buffett, somebody comes in and basically says, look, this was just nothing more than a circuit breaker problem or just some kind of a glitch in software. There's no way that the market should have doing what it was doing. So where did all the selling come from? The selling did not come from your average investors.
The market was already down a couple hundred points, though, in fairness.
The market, I think the market probably would have ended down probably in the neighborhood of 1%. And that would have been a good, orderly, continued sell-off that we've been having.
All right, so let's have that discussion then. So, because Jen is right. I mean, to some extent, it's wild speculation to get into what may have happened yesterday, because none of us know. The four of us here really don't know.
No. But
exactly what caused those.
I'm going to take an argument on that, Colin. I can't point out, as a doctor, let's say, with a patient, I can't point out exactly where the virus hit the body.
Well, you knew something went wrong.
Something happened,
you don't know what caused it to go wrong. You don't know.
Started in Procter & Gamble.
No, that part. No, we agree that there was something strange, obviously, that happened in Procter & Gamble, and like a stock like Accenture, it's crazy. If we go from whatever it went, $40 to a cent. I mean, those things should not happen. Agreed, fine. But the idea that the market was down a couple of hundred points already, and to Ron's point that the buyers, although it came back from whether it was the glitch or whatever the problem happened, it came back from that. We still ended up down 350 points on the day, and we're still talking about these issues in Europe that everybody tells us, oh, it's a small country, we shouldn't worry about it. Then where are the buyers here in the United States? We're supposed to be the safe haven. I mean, why aren't we bouncing back here?
I think
maybe we will. I don't know.
This is a catalyst to go back and say, what is really the real valuation of the market versus the economy? you're right. If the job numbers come in, as expected, around 200,000, the market should still be down, in my view, because that does not solve the sovereign bubble issue. The sovereign bubble issue is going to chase us throughout. We know that ahead of us, there is the issue of that liquidity is going to be taken out. Government buying of purchases are going to be, purchase of securities are going to be out. And we also know the rates have to be higher, right? For Spain to come out and issue in a 3-handle bond just last week is ludicrous when everybody else is worried about it. That's actually telling you something, that the money is really cheap right now, and that cheapness is not going to last too long. So the question is, what happens when China pulls away and say, okay, our banks have to actually have more capital. We're not.
Well, they're already doing that. I mean,
they're doing that, but they're going to. So they know they have to do a lot more. When the bubble, credit bubble hits China, then we have to worry about what's going to happen here.
To the markets. Thanks, guys. We'll come back.
Well, yeah, we're going to definitely be talking about this, not only just for this morning, but